So all of the banks, including the central banks, including the commercial banks, including the regional banks, they are all severely underwater. All we see is the very tippy top of the iceberg. What creates that danger for us is all of the garbage that has to be exploding beneath the surface.
Hey everybody, Smart Silver Stacker here. Hope you're all doing well. Today I am joined by a guest with a lot of knowledge in the gold and silver space. I'm very excited to speak with Lynette Zang, founder and CEO of Zang Enterprises. Welcome back, Lynette.
Well, thank you for having me, Smart Silver Stacker.
So a lot has changed since the last time we spoke. I think we talked last in September of 2023. Price of gold was around $2,000. Silver was around 23. Again, a lot has changed since then. So give me your thoughts on the current moves that we're witnessing in the metals.
Here's the thing. I don't believe the spot market. I am quite clear on the fact that Wall Street is not going to tell us the true value of either gold or silver. Even with this move, both of those nominal prices in terms of actually not just dollars, but anywhere in the world, the reality is they are severely undervalued because a rising gold price is an indication of a failing currency. So we've just had technical breakouts in both gold and silver, and I anticipate them continuing to go up. We have a lot that's happening geopolitically around the world with more and more wars. Is this turning into World War III? Is it already World War III? What's happening with the interest rates and how that, the ability of the Fed or him saying we're not going to lower rates. I mean, that should put downward pressure on spot gold anyway, not real physical gold, because demand in both of these areas is exceeding supply. Just look at what the central banks are doing. So, I think that the pricing that we're seeing is chump change. And don't believe it. Keep stacking both gold and silver because they're both severely undervalued, but that will not remain that way forever.
So you mentioned central banks, and it seems like from my perspective, a lot of this rally thus far has been driven by the central bank purchases. We've seen gold taking out new all-time record highs. It seems like almost every session. We just had a record close yesterday. Silver, it's begun to move a little bit, but it hasn't really woken up, considering the fact that it's still almost just half of its nominal all-time high from 2011. So when do you think the public will begin getting into these markets and buying up the physical gold and silver? We haven't really even seen premiums rise on physical products too much thus far.
Well, I think that that's really already happening. And really it was 2005 for the central banks when they stopped at least visibly dumping gold and started to accumulate. And that was 2-3 years before it became obvious to people. So right now, with central bankers buying more gold than they ever have, that should be an indication of where they know this currency issue is really going. And when you talk about a nominal price, that's what I'm saying, nominal confusion. People get tied up in numbers, and they can really make numbers look however they want them to make, or however they want them to look. And even staying on silver for a minute, you had a president of the United States, President Johnson, come out and say that if they tried to hoard silver, that our government would smash that market, right? So don't believe anything that you see in the nominal world. Believe what you see in the devaluation world. That's the real trend, aside from what you see in the stock market or the bond market or the metals markets or the currency markets. The real market is what is happening to your purchasing power. Because at some point in here, and I don't think we're very far away because of what's happening with the monetary velocity chart according to the Federal Reserve. At some point in here, number one, inflation that they call sticky, meaning they can't get rid of it, it's because we're at the end of this currency's life cycle. And that's why you need real money. You need sound money. You need that gold. You need that silver. For me, silver is about barterability. Gold is about wealth preservation and opportunity positioning. But so I personally own both. And this is the opportunity to continue buying. Because what do you want? Do you want to put your wealth into an overvalued instrument that is in a long-term negative trend? Or do you want to put the lion's share of your wealth in an undervalued asset that is used on a global basis and is in a long-term positive trend, even though we haven't seen the breakout in silver? How do you know that it's a positive trend regardless of what anybody says, right? Well, what you do is you look at the chart and you look for higher and higher lows. Because as long as you keep getting higher and higher lows, I can't give you a lot of guarantees, but I can give you this one. If you keep getting higher and higher lows, you will get higher and higher highs. And at some point in here, like I'm watching Zimbabwe quite closely on this one because they have been experimenting first by issuing 1 ounce gold coins to the population, which who can afford those but the 1%. Then bringing out the gold-backed CBDC, but it is not convertible into the gold, so you can't really hold their toes to the fire, and the population is not trusting it, which I think is a good thing. And now they've just put a component of gold into a basket of currencies for their most current iteration, and we'll see how that goes. But you know, we are having the opportunity, even in Argentina, we are having the opportunity to see what that looks like. Argentina is still in the early stages of their hyperinflation. So what do you got to have in that case? Well, your first line of defense is cash, because that's the most recognized thing for the moment. Your second line of defense is right here. It's silver, and it's different sizes of silver, right? So everybody that's watching you knows the pre-64 90% silver. Personally, you know, I like a variety of sizes because it's easier to put like 2 dimes together than to break a quarter in half. So I have a tendency, I have all the sizes, but I probably have more of the dimes than I do, you know, the dollar, although that may or may not be true. I don't know. I just keep stacking. I don't care what it is. Even this. That's a plate of sterling silver stuff, right? And you can see how tarnished it is. And some of it's like really kind of broken and whatever. But the thing about gold and silver is that it's no matter what form it's in, it's monetary at its base. Will I really give a crap if I have to snip this little iced teaspoon, sterling silver iced teaspoon in half? No, I won't care. I won't care about that.
Precedent. I think it was the Vikings that used to use hack silver, where they would, you know, go raid a monastery and take the silver and cut it up and use it as a means of currency, a means of exchange for hundreds of years. So humans have certainly done that before. Could happen again. Now, you mentioned, I want to walk it back a little bit there. You mentioned Zimbabwe and their gold-backed currency. What are your thoughts on the possibility of other gold-backed currencies emerging, perhaps among the BRICS nations, perhaps Iran? They have announced a project with their central bank and the Russian central bank to develop gold-backed stable coins. So to what extent do you think the prospect of gold-backed currencies or de-dollarization is contributing to the rise of the price of gold?
Well, that's a really good question. I would say that that is definitely, that could be a part of it, but you see that paper market where they can create as much gold and silver as they want, that does not nor ever will exist. You really see a difference between the spot markets and the physical only market. Like, this kind of stuff and this kind of stuff is going, and even this kind of stuff is going to be right now guided more by the spot market. And you mentioned earlier the premiums haven't really gone up. So there's all different ways that you can hide that. But this is a collectible coin. The date on this one happens to be 1914, right? So this is a pre-33 $20 gold piece. This is a physical only market. And in the physical only market, you're seeing breakouts. So you're seeing that this happened way before the recent breakouts in the spot market. They kind of told you that this was the direction that was going in. But it's still in this, which is a lower quality. Gold content is all the same. It's just that there are more of them and they have more blemishes. But and that's breaking out, not to brand new highs, but that's breaking out. And that foretold what was going to happen in the spot market. In the ultra rarities where there's just 1 or 3 or something like that. And these are coins where you'll have an ounce of gold, or for that matter, even an ounce of silver, very, very rare. And those are at all-time highs and have been rising for quite some time and are substantially above their all-time highs. And these are, you don't have to spend $15 million on 1 ounce of gold to be in this category. But I watch that category because it tells me what the smart money, because anybody that can afford $15 million for a coin, they either write the laws or have the ability to influence those that write the laws, right? So this, for me, and also desperate governments do desperate things, and with a history of announcing manipulation. I mean, even Alan Greenspan, a great maestro, talked about manipulating the spot prices. But in this area, this is where you're finding a whole lot more truth. And it's more private, in my opinion. It's a safer way to go. But anybody can do, everybody's got to do what they're comfortable with, regardless of what anybody says.
Of course. Yeah. Always important to do your own due diligence on all of these matters, of course. And, there's no one size fits all solution for anybody. That's interesting. I don't really follow the premiums on the collectible or numismatic bullion too closely. The junk silver, the pre-64, 90% US silver coins, it is interesting to me the premiums on that have really remained relatively low, especially in light of what occurred with those premiums in March of 2023, where they skyrocketed during the collapse of the banking system, or the perceived imminent collapse, perhaps, that the Federal Reserve and others were able to forestall, at least temporarily. And on that note, let's shift the conversation here to what's going on with the banks. We've seen recently, over the past several trading sessions, the yield on U.S. Treasuries creeping ever higher. The 10-year yield, I think, is now over 4.6. That's exactly what triggered that crisis in March of last year. How are the banks doing in your assessment? We've seen New York Community Bank Corp coming under tremendous pressure, getting kind of a stealth bailout there by Steve Mnuchin, but there's a lot to talk about in this regard, I think. So I'd love to get your take on it.
Well, look, it's really simple. We had 15 years of zero interest rate policy. So they were buying the bonds, right? Because they were forced to. 15 years, they had government bonds at 0, or in many cases, negative rates. Then they pushed up the interest rates. Well, they still have those bonds, but the market value of those bonds are severely undervalued. So what happened with those regional banks is that there was a run, right? Entities wanted their money. And in this digital world, That's a button push. And so they were forced to liquidate or attempt to liquidate these bonds that were severely underwater. Now, they can say that they hold them to maturity, so therefore the price isn't really that they're reporting right down here, the market value. They're reporting it as if it's equal. But that's true in every single bank. They're not going to mature. Well, that's not really true. If they hold them to maturity, they can mature at par. But when there is a run on the banks, then they have to sell whatever the market will bear at whatever price that market will bear. So all of the banks, including the central banks, including the commercial banks, including the regional banks, they are all severely underwater. They're in deep doo-doo. And it's not just the holdings, it's all of the bets on interest rates that all we see is the very tippy top of the iceberg. What creates that danger for us is all of the garbage that has to be exploding beneath the surface. But since it's the guys that create this garbage, control this garbage, and can declare whether or not there's a default on this garbage, they're managing our expectations, the public's expectations that everything must be fine. But it's not fine at all. And if you look at the most current data, unless they brought it out within the last 2 weeks, I think was the last time I looked at what was in the DIF fund, the deposit insurance fund to pay off in case of failing banks, they had less than they had in March, right? So you have roughly 1 penny for every insured dollar. So just like the financial crisis in 2008, where all of those banks went under, the FDIC stated, and unfortunately, I didn't know how to grab print screen at that time, but they stated that if even one more small bank went out, then the public would know that there is not enough in that DIF fund to support a full run on the banking system. And what was it, last year? We even had, and if you want, I have the audio on this, I'm happy to send it to you. But at the meeting at the FDIC, they were laughing about the fact that the public was going to be bailed in. But they didn't need to know it because that would create a panic. And any of the big guys, well, they have attorneys there that will understand this and help them. So it's the public that yet again gets fleeced. And that's why it is critically important for people to be holding these metals outside of the system. And it's also a way for us to vote, right? I mean, you look at what we're dealing with right now, and I've studied currencies and currency life cycle since 1987. We are at the end of this fiat money experiment, transitioning into the new digital system that they want us to go into. They say, the IMF, so that's all the central banks and treasury secretaries, once we get that CBDC, we can have our finger on the button 24/7. They also say that negative interest rates are a choice. Are you freaking kidding me? Yes, I don't know you. You're a government, you're a corporation. I'm going to loan you my hard-earned money and accept back less than what I give you and take all of that risk. The only entities that I would make that choice for would be my children. That's it. You going to make it for anybody else? You going to agree to that with the government? So what they're saying is, and this is just a fact, you can go on the FRED, F-R-E-D, the Federal Reserve Education Department, and go ahead and put purchasing power of the consumer dollar in that search bar. And what you're going to see is a constant move downward. That is the real trend. It's not as the stock market going up, is your real estate going up in terms of those dollars. It is that your purchasing power is going down. And the only way to protect that is right here. That's the only way to protect that.
Yeah, it's pretty incredible that we're essentially told that that is the game plan for the dollar. I mean, the Fed tells us that in plain sight. Their target is a 2% devaluation. Now, they certainly seem to be outdoing themselves in that recently. The stated objective is the constant depreciation of the dollar. You mentioned the confidence game aspect of this, how a lot of it is managing the perceptions of the public and the confidence of the public in the financial system. So this is going to be kind of a two-part question for you, but what do you think it will take to shatter that confidence in this system? And when that occurs, what will the fallout be?
Well, we've been witnessing what it takes, which is obvious inflation, right? And especially at the grocery store, because people go there 1, 2, 3 times a week. And so that means that those prices are right in front of their faces, and food prices have not been going down, and they've been escalating. So it is rapid inflation there and at the gas pumps, which obviously with oil above $90 a barrel, we're seeing increases in that regard as well, right? So this is inflation in your face to the general public. And when people have to make a choice between feeding their family and putting gas in the car, they're going to notice that. And so the level of confidence in here, that's why you hear consumer confidence, inflation expectations, all of these things, because Jay Powell just said this in front of the Senate Banking Committee, last week? If people think we only have 2% inflation, then we will only have 2% inflation. And it was Henry Kissinger that said, it is not what's true that counts, it's what is perceived to be true that counts. But what will demolish that confidence, and what has been demolishing that confidence, because we've been watching that be whittled away, is rapid inflation. But it was 2008. This is a con game, to your point. This is a con game. 2008, that interbank lending, so banks loaning to other banks, collapsed. They don't even trace it anymore because it collapsed. So bank to bank confidence was gone. In 2015, with the Swiss surprise against the euro, it was, the Swiss central bank came out, like daily, saying our peg to the euro is top most important and most important, most important, most important. And a day after they said that it was their highest priority, bam, they suddenly was not their highest priority. So that was central bank to central bank, which, by the way, we're seeing a decoupling happening in that right now. I'll come back to that. And then finally, it was June of 22, where the Federal Reserve, the global central banks, because this is true across the pond as well, we're saying 50 basis points, telling the markets, right? Forward guidance, 50 basis points, 50 basis points, 50 basis points, and then boom, surprise them with a 75% basis point move. So it was the markets to the central banks. And, there used to be this saying, don't fight the Fed. Well, I'm seeing a lot of shifts and pattern shifts and decoupling that's happening right now. Number one, to go back to, the world was operating with synchronized central banks. Everybody lifted their rates at the same time and they dropped their rates at the same time. Switzerland recently was the first advanced economy to drop their rates. The Federal Reserve and the Bank of England, a number of the other advanced economies, are maintaining those rates. That is a shift. And certainly in some developing nations, they're raising their rates. So the synchronization amongst the central banks is gone. That's a freaking big deal. On top of that, you have that central bank. So that's the central bank to central bank. The markets, where the motto was, once that forward guidance, so the Fed or the central banks would come out, tell banks what they were going to do so the banks could get into position to benefit from it, right? But once that confidence is lost, what are we seeing? We're seeing the markets go up, even as Jay Powell is saying, hey, we're going to keep rates high. We might even raise them again, right? So the markets are now fighting the Fed. Are the markets stronger than the Fed? Well, frankly, if the derivatives get away from them, then I believe, I mean, the last time I was able to check before they changed how they formulated the nominal value of derivatives, it was at 1.4 quadrillion. And that simply reflects the market value, not the true underlying value that is at risk. So could that prevent and overwhelm the central bank's ability to do this and make everything look hunky-dory? Yes, it could. Yes, it could, because how many quadrillions are there? It's so much higher than the global GDP. They couldn't print enough, though they could create enough money too. And what does that do? There's your hyperinflation. Thank you very much.
Certainly the number of dollars they can create, in theory at least, is infinite. So you mentioned that the perception of reality, according to these individuals, these political elites, the central bankers, is more important than the actual reality itself. And that puts me in mind of another quote from Ayn Rand, who said that you can ignore reality, but you can't ignore the consequences of ignoring reality. And I think that that idea that, perceptions are the only thing that matters only holds true until it doesn't. And we may be approaching that point very soon. So what do you think the Fed will do as they are faced with this situation where you have the potential of a collapsing derivatives market, you have an insolvent financial system, you have massive deficits which need to be financed somehow? The Fed's in this situation. However, you've got inflation now, which is sticky, as they say, or about to run out of control. Depends on how you look at it. But what will the Fed do? What do you think they'll do? Are they going to err on the side of caution and let everything collapse? Are they going to print a huge amount of money or currency, rather? What's your take on what's coming as far as Federal Reserve monetary policy?
Well, this is really a great question because they're really out of tools. Now, I'm not saying that I wasn't surprised with quantitative easing in 2009, right? They were out of tools then, but the two key tools that they have in their toolbox are interest rates. So those interest rates will go to zero, and I think we'll see negative rates in this country, and you'll see them turning on the printing presses because they don't have any choice, right? And I think that will send us into hyperinflation, because the other part is everybody assumes that they want to keep kicking the can down the road, but they really only want to kick the can down the road until they're ready to shift us into a new system. And then in order to get us to accept that new system, they keep it. I mean, these are their words, not mine. They keep it looking as normal as possible. Like, I was there in 1971. I did not know that we went from at least a quasi gold-backed dollar into a full debt-backed dollar, right? The dollars, if you look at the bills prior to 1971 and after 1971, they are almost identical, right? So people marry the dollar. So we'll have a digital dollar because that'll keep it more normal. People go, well, it's a dollar, right? A dollar's still here. Well, it's a very different dollar that will then move us into this new system. As long as there is a big enough crisis for people to be scared, poopyless, and then, we're trapped in a new system. That's why what you do, what I do, which is building this community and waking people up, that's why this is so critically important, because we vote with our wallets. We vote with our purses. So if you keep all your wealth inside of the system, this garbage system, when the purchasing power of this goes to full zero, and officially it's 3 cents, which means it's worse than that because they massage those numbers, right? What do you have? You could have $10 trillion in the stock market, and it has absolutely zero value. zero value, right? So, voting with our wallets, buying physical gold, buying physical silver, because the reality is this, JP Morgan said it best, only gold is money, everything else is credit. And I'd say, I'll add a little bit to it. Gold is the primary currency metal, silver is the secondary currency metal. Everything else runs counterparty risk. Everything else is just a contract. And any contract is only as good as the entity on the other side of that contract. There are no guarantees in this world, but this is real money that has made it for thousands and thousands and thousands of years. Why? Because it has the broadest, I never hear people talk about this. It drives me nuts. But these two assets, real hard, tangible assets, have the most utility of any asset in the world simply because they're used in every single segment of the global economy. This needs a government to say this is money. This does not need a government to say this is money. People know this is money. It's got the broadest utility, the broadest base of buyer, the broadest base of demand. So does it go up and down as demand and supply move up and down? Sure it does, unless you're looking at the spot market. However, in the physical only market, yeah, it does. And I see a run when the public recognizes what's happening. I see a run to the physical markets, and I see it tighter than we've ever seen it before. Because do you sell your physical metals?
I've never sold an ounce.
Voila, right? So people that are accumulating it, they're not letting it go, and there's a finite amount of it. And really, in my mind, a key difference between gold and silver is that gold is recoverable, right? So we can account for like 98% of all the gold that has ever been mined. Silver gets used up, so it's actually its scarcity value kind of grows, and there's a limited quantity in both of these, and they have full function, full demand. That's why they've never gone to zero. It's not rocket science. It's because there's always demand.
Absolutely. And that demand, I think, as you say, will likely go much higher, especially for the physical metal that you can hold in your hands. You talked about a derivatives bubble over $1 quadrillion. And then you also think of all the paper, gold, and silver derivatives that are out there and how little underlying metal there actually is backing all of that up. So you can imagine if we do face a crisis, if we do face hyperinflation, it's a very crowded theater with a very, very small exit. Infinitesimally small, especially when you talk about silver. I think last year the deficit in silver was 190 million ounces. As you say, it gets consumed annually. And at the current valuation, there's not a lot of incentive for faster production. They can produce dollars a lot faster than they can produce gold or silver. So in this event, what do you view as an exit strategy or an end game for those holding gold and silver? I mean, is it some kind of just wealth preservation to another paradigm? How do you envision that?
Well, I mean, the way that it's happened in history, right? Everybody, I think, well, not everybody, but certainly all of your viewers, my viewers, people are starting to wake up to the fact that this is a wealth transfer game, right? So you want to be in a position to, number one, sustain a reasonable standard of living. And we can take a look at historically how both gold and silver behave during these kinds of transitions. So for me, what I've done is silver is my primary barterable position, and I've covered my cost of living based upon historic norms for about 10 years. But then with the gold, well, that puts you in a little different position. There is barterable gold, some of the smaller fractional pieces that can take care of, I've looked at what happens to all these different asset classes, whether it's real estate or other income producing assets, rights, things like that. Or whether it's stocks or bonds and all of this kind of stuff. And what's going to happen in this transition is all of those zombie corporations. And a zombie corporation is a corporation that for at least 3 years have not had from their cash flow the ability to pay the interest on their debt, forget touching the principal, right? So because the banks didn't want to show those losses on their books, they simply loaned them more money, especially at a zero interest rate environment. They loaned them more money so that they could remain in, quote, good standing, but then taken on a lot of debt. Well, all of that garbage is going to be washed out. I don't know which companies are going to be able to survive this yet, but we will know. The overvaluation in real estate assets will also be washed out. So we've got, and the bond market as well, we're already seeing, spiking defaults. But all of these instruments, and especially the stocks and bonds that are based upon this, right? Everything always goes to its fundamental value, right? Again, I can't give you a lot of guarantees, but history has shown that over 4,800 times, period. Everything moves to its fundamental value. So right now, you have gold and silver that are severely undervalued because they don't want you to know that this money is a problem, right? In trouble. And you have these other valued instruments that are and assets that are severely overvalued because they were targeted for inflation, since that's what people look at. This is going to flip-flop, right? So the silver plus food, water, energy, security, barterability, wealth preservation, community, and shelter. That's what helps you sustain your standard of living, and you got to get that done. But the other part of it is putting yourself in a position so that when this flip-flop happens, number one, boom, any fixed rate debt that you have, you can pay off instantly, say a mortgage. But also, it puts you in a position when these other overvalued assets are now severely undervalued, like gold and silver is. And we see what those that know, the smartest people in the room, begin to accumulate and create what's called a cup formation. Kind of looks like the bottom of a cup. Well, that's when you take your gains from here and you shift them into those other income producing assets. So that on the other side of this mess, you have expanded your income and your wealth base. And for those of us that are looking to at some point retire, you cannot outlive that income or those assets, and you've bought them at a severe undervaluated level. So that's, this is not rocket science. It's not something that I made up. It's just the patterns that I recognize. And these are things that happen to different degrees, but 100% of the time, well over 4,800 times. Because while I can't tell you what's going to happen tomorrow, if something, in my opinion, if something's happened over 4,800 times the same way, and we're doing the same thing, what's the most likely outcome? We're going to get the same results. So it isn't just that it preserves your wealth. There are lots of parts of the strategy for those people that make the choice to keep their wealth in the system. You want to be properly diversified, right? In order to make sure that you can eat, put gas in your car, you want to be properly diversified outside of the system. So the strategy really addresses all these different things in layers, depending upon your goals, your circumstance, what you have to work with. But it is a full comprehensive strategy. And that's what you find on our YouTube channel. Food, water, energy security, barterability, wealth preservation, community, and shelter. Get it done. But there are lots of things that you can do with the physical metals as we go through this transition. And it certainly puts you in a position to maintain your wealth and actually grow your wealth base.
The metals seem like a good way to build the generational wealth, and certainly those other needs that you mentioned, food, water security, all incredibly important, because if you don't have those things, gold and silver aren't going to do you much good. But assuming you have all those things squared away, I do think that, there will be huge opportunities, as you say, for those who hold real physical tangible assets that are incredibly undervalued today. Gold, despite the fact that it's taking out record highs, I agree that it's going much higher. And silver, I mean, you'd be hard pressed to find a more undervalued asset, I think, than silver. And all you have to do is look at the Dow to silver ratio, the Dow to gold ratio. There's countless indicators that show that gold and silver are, if you want to buy something cheap, I mean, they're what's cheap right now. All right, Lynette. Well, I just want to say a huge thank you for joining me on the channel today. Is there anything you want to finish up with before we wrap this up?
I really want people to understand that even though I can't tell you it's going to be Tuesday morning at 8:35, I'm very uncomfortable with these pattern shifts that I'm seeing. And people seem to think that they have all the time in the world because they don't see the shifts that are happening in their day-to-day lives. But the reality is we only have, to your point, you said it earlier, we only have as much time as we have. And personally, I don't care if I'm 10 years too early. I just don't want to be 1 second too late. So please, people, understand this is not the time to procrastinate, but this is really important to come together in local community, go out to the farmer's market, meet those people that create your food, create a relationship with them, volunteer on their farms for a day, because you're going to be counting on them, because you just don't have the luxury of building out a whole urban farm and all of that. We're running out of time. And globally, let's create this movement. You want to know how to vote and how to have a seat at the table? You buy physical gold and silver. That's how you vote. We vote with our wallets. We vote with our purses, and we come together in community. The rise of the unions that we've seen over the last couple of years, I mean, it's huge. It's giving me so much hope. So, just get it done. Create that local community, come together in the global community, keep watching Smart Silver Stacker. Join me at the Lynette Zang on YouTube, Twitter, and be a part of this change, because I absolutely know that together we can make a positive difference for a lot of people. And that's our job. We need to come together in community to help each other through this. And guess what? Even thrive through it. Come out the other side way better with a more fair monetary system.
Yeah, absolutely. A community is going to be perhaps the most important asset of all as we go through these changes. And as you say, things are starting to move pretty quickly. So, we don't know how much time we have to get prepared, but I think it's critical. And I just want to again say a huge thank you for joining me today. Thank you so much, Lynette. Great insights, great information for the gold and silver markets. Everybody, make sure you check out Lynette's YouTube channel, follow her on Twitter, check out all her socials. We'll put some links down in the description, and we'll have to do this again sometime, Lynette. Thank you so much.